Thank you all for coming and joining by phone.
The broadcast is now starting. All attendees are in
my name is
mode.
Anthony Behrens, and obviously you're here for the BHP Alternatives 1332 waivers discussion. I'm going to go over the agenda real briefly, and then we'll go around the room and on the phone and do introductions. So for those of you in the room, I think most of you know, but bathrooms are just around this corner here. The men's bathroom is on this side of the elevators, and the women's bathroom is on the other side of the elevators. As far as the meeting goes, we're going to start out with an overview of the House bill that requires us to convene today, House Bill 4017. And we'll give an overview of 1332, and Don Jagger's going to present those items. From there, we'll move into a discussion of BHP Alternatives and 1332 ideas. So hopefully you came with some great ideas, and we're excited to listen to those. Katie's going to start by talking about what other states have proposed. Then I will kind of give an overall sort of framework of the landscape that we're dealing with, and then we'll solicit ideas from you all. From there, we'll transition into talking about future meetings, the dates of those meetings, and then we'll also talk about the last meeting specifically, and the public comments in that last meeting. And then that will end the meeting. So again, my name is Anthony Behrens, and I don't think we have a lot of people on the phone, so we'll start with the phone. I know Teresa Barney from MODA's on the phone. Do we have anyone else on the phone? Okie dokie. So we'll go this way.
Hi, I'm Dawn Jagger, the Federal Policy Liaison with the Health Insurance Marketplace.
Hi, I'm Katie Button. I'm the Plan Management Analyst for the Marketplace.
Michael Shaw, Manager of Regulatory Affairs for Providence Health Plan.
Brian Fordham with CFR.
Barry Leslie with the Marketplace.
Sean McAnulty, Enrollment Specialist for Project Access Now.
Shannon Conley with HealthNet.
John Mullen, Oregon Law Center through the end of December.
Tim Sweeney with the Oregon Health Authority in the Health Policy Office.
Jesse O'Brien with OSPERC.
Okay, thank you. And just a reminder before we leave, if you haven't signed in, please do sign in. That goes for our guests that are viewing as well, our guests. So Don, I'm going to turn it over to you to talk about 4017 and give an overview of 1332 waivers.
Perfect. So I think I will first start that if people who are here and who are on the phone have an interest in this committee work and who worked at the previous BHP subcommittee work, have a general understanding of 1332s, and so I'll be going a little bit more in detail, but I'll also kind of give a high-level overview of the process, and then also talk about kind of what does a 1332 mean in the context of everything that's happening and transitioning, because I think that's kind of the big elephant in the room as well, is what does that actually mean, and how can we approach this work in a meaningful way, which I think there is a lot of meaning to this work despite transitions and a lot of other things happening. So like Anthony said, I will kind of give a brief little discussion of what House Bill 4017 charges DCBS with, what kind of the work that has already gone into studying the basic health program, how this subcommittee fits into that work, and then go into what is the 1332, what is allowed to be waived, how can we approach that work, and kind of what have been termed the 4 guardrails of looking at 1332 waivers and what are the restrictions or the limitations. And I just want to remind everybody that those constraints and I'll say this again, those limitations are with the current administration. So that's why it makes the conversation a little bit tough to have when I'm discussing these guardrails and the guidance that has been provided, because that is guidance that can be taken back, and it can be amended, and it can be considered in other ways. And then I will also go into the kind of the more detailed part of this, which I think if you're sitting at the table, you're interested in the details, and we can kind of dig in a little bit to what does a 1332 application actually have to look like, and what is the work that actually needs to go into that type of a document, which is, I think, important to always remember that this isn't just there isn't a magic wand. This doesn't simply fix anything right away. You have to dig in, and the federal government has some specific requirements to be able to pursue that. So that's kind of how I think I will go through this. Please chime in with questions, and then I will pause also to see if there are questions, but I just want to make sure everybody feels like they can, on the phone or in the room, jump in at any time. So House Bill 4017 really charged DCBS with two main things. The first thing was to look at the basic health program, which the Oregon Health Authority had done some significant work looking into already, and so that work ended a few weeks ago when there was a presentation to the Marketplace Advisory Committee, who ultimately recommended that the state of Oregon not pursue a basic health program, but really take the time to look in depth at alternative approaches to achieving the basic health program and achieving the objectives of the basic health program. And that was explicitly stated during the Marketplace Advisory Committee, which was teed up perfectly the work of this subgroup, which is actually charged in House Bill 4017 for looking at potential 1332 waivers and also really looking into alternative approaches for the state to achieve the objectives of the basic health program. So those are kind of the two main areas that this group will be looking into. And then I want to talk a little bit about the structure that the Marketplace Advisory Committee kind of talked about, kind of putting on this group, especially because of the context of the change of administration. But first I'll pause for a second and see if there's questions just on that baseline. So one thing that came up during the Marketplace Advisory Committee meeting was the fact that the House Bill 4017 requires this information to be presented in a report to the legislature by March 1st, 2017. And when you're looking at 1332 waivers, what you're looking at is where are the gaps in the Affordable Care Act, or where is something that the state can do to improve the Affordable Care Act. And right now we're not sure where the Affordable Care Act will land or where the incoming administration wants that to go. So sometimes it's hard to have a conversation about where the gaps are and what we want to do moving forward if we don't know what the baseline is. So one suggestion that the Marketplace Advisory Committee had was to have some sort of interim report on March 1st about the 1332, this subcommittee's work, knowing that we may not have all the information of what the Trump administration would like to do until January or February, and then be able to have some sort of additional report. So that was the recommendation from the Marketplace Advisory Committee, and so I think that's just good context to have that came out of that meeting. Is there anything, Jesse, you want to add about that process?
I would just add, if this isn't already clear to everybody in the room, which it probably is, that the Marketplace Advisory Committee is very enthusiastic about trying to come up with some sort of program that we can do to achieve at least some of the objectives of the basic health plan. The question is what we could actually accomplish. So, I mean, I think the sense that I got was that there was a commitment to come up with a concrete recommendation that wouldn't be just doing nothing. If that's possible. We need to figure out whether it's possible.
Absolutely, right. And so I think that it's a good way to think about the conversation that if you're thinking about 1332s and if you start at what provisions of the ACA should be waived, it's tough to start there because we don't know what that will look like, rather than looking at it from Jesse's perspective and how you just explained it, which is, let's see what do we need to do to achieve these alternatives, and do we even need a waiver to pursue those alternative options, which the answer may be that you don't need a waiver. Regardless of what's happening with the ACA, it could be achieving whatever goal this committee decides to recommend. You may not need a waiver. So sometimes shifting the narrative or shifting how we're looking at this work can be helpful to get to an answer. Okay, so with that about 4017, is there anything else? Otherwise, I'll move into 1332. No? Okay. So there's kind of been Section 1332 of the actual provision goes through and specifically says what provisions can be waived, and those have been described in kind of 4 different buckets. And so the first bucket of provisions that actually can be waived is this individual mandate. So states can modify or eliminate the tax penalties that the ACA imposes on individuals who fail to maintain coverage. The second bucket is kind of the employer mandate, so a similar provision that can be waived. The third is the actual benefits and subsidies of the ACA. Those provisions around those benefits and subsidy structure can also be waived. And lastly, kind of the fourth bucket that people describe it is actually the exchange and the qualified health plans themselves, and the certification process is also an area that can be waived. So now getting into kind of the details of how does the waiver process actually work, and how does the CMS and the current administration, how have they explained how they would approach a waiver? What do they look at when a state applies to the federal government and says, we'd like to waive these provisions? And so there are 4 guardrails, or what are described as 4 guardrails, where there hadn't been a lot of information explaining what these guardrails were. And then states were asking for more information, CMS, please provide us. And it was one of those things where, we got what we wished for. We got information about these guardrails, but it turned out CMS was actually really restricting what those guardrails meant. And it turned out they kind of went in a different direction than we had anticipated. They weren't expanding state flexibility with these guardrails. Instead, they really were kind of focusing what they would be looking at. So how I'll explain this is there's these 4 guardrails, but then there's some additional guidance that CMS published about a year ago that kind of provides the scope or the lens through which CMS looks at these 4 guardrails. There's this lens that CMS will look to all of these guardrails to see if they meet certain specifications, and they're pretty rigid. So first, the guardrails in general, a waiver must provide coverage to at least as many people as the Affordable Care Act would provide without the waiver. So this is known as the scope of coverage guardrail. So you must provide coverage to at least as many people as the ACA would provide without the waiver. Next is this affordability guardrail, which is the waiver must provide coverage and cost-sharing protections against excessive out-of-pocket spending that is at least as affordable as exchange coverage. And I'll go into more detail about these. And then third, comprehensive coverage, which is the waiver must provide coverage that is at least as comprehensive as coverage offered through the ACA or through the exchange. And lastly, there's a federal deficit guardrail, which is the waiver must not increase the federal deficit. So this additional guidance, or this lens that I was just speaking of, that kind of, right, those are really broad terms. Those are not really well explained. They're not really well defined, and they weren't very well defined. And so they seem really broad, and that means that there could be a lot of state flexibility. So this additional guidance that was given really limited it. So with all 4 of those guardrails, you must look, a state must demonstrate and must explain how this waiver will affect all state residents, regardless of the type of coverage they have, not just applicable to exchange customers. You need to look at how this will affect people who are under employer coverage, who are employer-sponsored coverage, who are under Medicaid coverage, and it needs to be a comprehensive look. So that's taking this and taking a lot of steps back and taking a whole look at the entire state. So a waiver has to look to the whole state coverage system and make sure that the coverage will remain the same, that you will have, the affordability will remain the same. And then also this additional guidance zooms in. It zooms in really, really deeply and says when you apply for a waiver, you need to also look specifically at certain subgroups. You need to look at vulnerable populations. You need to look at low-income individuals, and you need to look at elderly individuals, people with serious health issues, and even if the overall state coverage goes up because of your waiver, if there are any of these subgroups go down, this waiver could fail. So that, as Jesse's nodding his head, that's part of this really limiting and narrowing of how the federal government explained in their guidance how they would be looking at these guardrails. So again, taking steps back, saying we want to see how the whole state will be affected with this, not just exchange coverage, but we also want to go dig down and make sure that certain vulnerable populations, certain subgroups are not missed out on, and they aren't just, we don't forget about them because they're a small subgroup who might have high utilization or anything like that. We need to make sure that we are looking everywhere on that whole, on the whole scale. So let me take a pause for a moment and see if there are questions there. Yeah.
Just setting aside the election for a moment.
Sure.
When CMS came out with their guide rails and discussions about the restrictions, because Senator Wyden was so instrumental in getting 1332 into the ACA, has the state engaged at all with Senator Wyden about the flexibility being less flexible?
Sure. Not to my knowledge at this point. I think back a year ago, I don't think we were in a position yet to know where we were with those conversations, where we wanted to go with 1332. So I don't think those conversations happened. And then, yeah, so that's where I don't believe so.
Well, just for what it's worth, just to follow up very quickly,
Sure.
The ACA will be around for at least a while. And so if there is a plan based in March, it might be instructive and helpful to have a conversation with Senator Wyden in advance of that.
And we do know, or can probably infer that Senator Wyden still cares a lot about this program because he actually ran some ads mentioning the fact that he had put the provision in the ACA that would, as the ads put it, allow states to pursue a public option. So I think he still thinks of this as a legacy program. But Dawn, I'm not sure if you're going to get into the specifics of the guardrails around the federal deficit piece on this, because I think that's one of the most restrictive aspects of it.
Yeah, I can. I'll just kind of jump to that. So what's interesting is, so there's the federal deficit, and then specific to Oregon is the operational. And I hate starting with operational and technology because it kind of stops any conversation. But I think those two in some ways go hand in hand, that they're pretty restrictive. So the deficit guardrail, as Jesse said, so the new guidance really came out and said that, so to be really I will just read this. So projected federal spending net of revenues with waiver must be equal to or lower than spending of net federal revenues without the waiver. And so this, not only does it have to be, you have to present your application for the waiver, that the waiver must be budget neutral over a 10-year budget period, but you can't take into considerations any sort of savings that you would have under a Medicaid 1115 waiver. You can take savings from other federal programs, but not from an 1115 waiver. And you also have to, so I'm sorry, I'm going back to the timing. So you have to demonstrate that the waiver would be budget neutral over a 10-year period, and also demonstrate budget neutrality over each year of the waiver that you are asking for over the 5-year period. Now, if there isn't budget neutrality in year 1, but there is in year 2, that can be weighed, but the guidance says we really want to see every single year that there is budget neutrality. We are not necessarily trusting you states that you will get things back on track.
And one of the specific wrinkles in that might not be totally apparent from the wording is that it has to be budget neutral as a lump sum of money. It's not per enrollee.
Right.
So if whatever the program is leads to a bunch of additional people enrolling and accessing tax credits, and there aren't compensating savings, that would not be budget neutral, which is an interpretation of the law that a lot of consumer advocates disagreed with, and that some people were hoping to convince the next administration to change, but now that seems very unlikely to happen.
Right, because they are comparing exactly what you're saying. They're comparing the budget neutrality is compared to what would the state look like without the waiver. That's what you're being compared to. So if you increase enrollment, that would obviously increase the APTC that's having to be doled out. Increase it significantly compared to what it would be without the ACA. So these are the kinds of things that once this new guidance came out, people thought, oh, this really is restricting kind of states' flexibility. Yeah.
Yeah, at the same time, I know we can't count savings in 1115 waivers, but there just seems to be a sort of a different rationale surrounding 1115 and what we got in the past and what's currently been submitted by OHA. So I'm wondering if there's some lessons that can be drawn from the 1115 discussion, understanding we don't count savings over there, to say that with doing this, we're projecting some additional savings, and I just wonder if there's some thinking around that.
I think that learning from the 1115 waiver process is exactly what needs to happen, and having OHA here to just having that consultation is really critical, because that is the only process that we can look to see how this could play out, and it's also how HHS CMS can look at it, right? That's the waiver process that they know. They're going through this 1332 waiver process for the first time also, and I think we know that they're looking at the 1115 waiver process to kind of to guide them in some ways. So I think with that, I think I touched on the operational issues that we have using healthcare.gov, that any sort of waiver that this committee recommends, if there's any sort of technological or operational change that needs to be made to the eligibility system, that is something that at this point healthcare.gov has said they would not accommodate. So we're pretty restricted in that sense, that even if there's a provision that we'd like to waive, if it requires some sort of technology on the federal side, that probably won't be accommodated. That doesn't mean that the state can't decide that they want to do something or do whatever, but there would just have to be accommodations made for that on the state side.
Just
yeah.
On that point, I think that this committee wisely recommended about technology discussion, that it's sort of a wait and see kind of approach. This becomes even more of an interesting sort of discussion, and probably would be something you would report on in the March report. We may have a little bit more of a hint there about where the Trump administration wants to go. So if, for example, in a worst case scenario, we don't have the ACA, we don't have exchanges any longer, there are a number of technology issues that the state wants to accomplish in any case. And so it really is something that may wind up being a state investment, because it makes sense for the people in Oregon. So just for what that's worth.
Right. Well, and I think that's part of how do you want to approach this work? Do you want to see what are the problems, and then if a 1332 is required, or what are the problems, how can we solve them in this kind of more broader conversation? So with that, so I think what I will do is kind of explain next what the 1332 application requirements actually are, because that is an intensive process in and of itself, and we can look to the few other states who have actually gone through this process to see that they've hired outside consultants to do actuarial analysis. They've been doing this process. They started this process a while ago. I think a couple of the other states they were very motivated to do a 1332 waiver, because they felt that their coverage pre-ACA was actually more comprehensive than post-ACA, so they had a structure already that they were kind of going back to, and a proven, either proven data, or just they had the information to back up what they were trying to move towards, which was really going to kind of a pre-ACA world. So an application requirement really substantively requires a lot, and then it also just takes time to actually gather the information and to be able to produce this application. So your application has to obviously demonstrate that you're meeting these guardrails and these subgroups are protected, and that the state, and you're also taking a perspective of the state as a whole, but you also have to have actuarial analysis, actuarial certifications to support the state estimates that the waiver will comply with the comprehensive coverage requirement, the affordability requirement, and the scope of coverage requirements. So that's one requirement of the application. You need this detailed 10-year budget plan that demonstrates that the waiver will be deficit neutral to the federal government. You need detailed analysis of the impact of the waiver on the health insurance coverage of the state in its entirety. And then you also need, I'm sorry, this is out of order. You also need the detailed budget plan for year to year for the 5 years that you would actually be asking to waive us. And then you need a detailed plan as to how the state would actually implement the waiver, including a timeline and all of that development. Once you submit a waiver, the federal government has about 180 days by their own rule to issue their decision and to tell you yes or no. Within about 45 days of submission of your application, the federal government is responsible to tell you whether or not your application on its face meets the general requirements, whether you've actually submitted something that just on its face can at least move to the substantive part. So you get an initial preliminary determination that you've met the requirements, and then about 180 days later you receive some sort of response. So, and within all of that, you have to demonstrate that the state and the waiver idea has gone through a state public comment period, and then once the application is posted, it goes through a public comment period. So it's just a long process and an intense process, and I think that with the change in administration, that process also is subject to a lot of changes. Any questions?
So as far as the, I guess the process,
Mm-hmm.
it sounds to me maybe a year with the public comment period, the analysis is required.
I think that that's pretty reasonable, especially given what other states have done and how long it has taken them to go through that process. And remembering that a lot of those states, they already had the information about what their waiver was asking for, and we wouldn't necessarily have that same information or those same data points.
So when you say a year, I assume that means from when there's an affirmative decision to do this, right? So if our goal is to have a recommendation by July 1st or so, it would be a year from then that the waiver would actually be submitted or approved?
I think for the whole process it would take about a year for approval.
Right.
About that much, if not a little bit longer.
It's quite a ways out.
Mm-hmm.
It is. So I think that's for a first meeting, 9 o'clock in the morning. It's a lot of details, and I'm happy to go into more detail about anything, and I'll be available throughout this process to talk more about things. I think we all know that there is the elephant in the room, that these guardrails, these bulletins, this guidance could be very different. They could be very, very different. And they could also expand flexibility for states. You know, that's the scope of what could happen with 1332s it's pretty wide. It's a pretty broad scope. So I think that it's a little bit of a wait and see, but that doesn't mean, kind of how I started this, that the conversation around what does the state want to do and how does the state want to approach solving issues can't continue. It just is remembering that piece of this is a little bit unsteady at this point.
It seems like it's clearly a bit of a fool's errand to predict exactly what's going to happen, but it actually seems pretty likely to me that the 1332 will survive in some form and that the guardrails will be weakened, because my impression from watching conversations about this at the National Association of Insurance Commissioners, for instance, is that a lot of the states that have been most interested in this process have actually been red states that want to use the waiver process to create a more kind of conservative version of the ACA, and especially if some of the basic structures of the ACA are going to be in place for at least a couple of years, there might be some interest in preserving a process like that.
Right. I think that's a really good point that I think Katie or somebody will talk about with other states' experience, is that this really, 1332s have brought states together that don't always talk together, because you have Arkansas, a very red state, who is very interested in 1332s, and they have a state legislature who has been very active in talking about 1332s and about how can you use a 1332 to privatize certain aspects of the exchange. And then you have a state like Massachusetts or Vermont who has a very different approach, but still going through this same process. And so only time will tell, but it is interesting that you have people from both sides coming to 1332s from both sides who value having that state flexibility.
Any other questions for Dawn? Who do we have on the phone still? There's something wrong with the phone.
Teresa's still here.
Teresa's still there. Anyone else on the phone?
Victoria joined a little late. Good morning.
Hello. Okay, sounds like Teresa and Victoria. Okay. Dawn, did you have anything additional?
No.
Were there
Quick
any?
question?
Sorry. Yeah. Go ahead.
Have there been yet, and if so, which states that have actually finalized their 1332 applications?
There have been states that have submitted their applications.
Yeah.
None have been approved yet.
Right. So what states have formally submitted their applications?
Well, we're actually gonna.
Okay.
That's a great segue
Yeah,
into what Katie's gonna
Perfect.
talk
So
about.
yeah, so there, like Dawn said, there have been a lot of states that have talked about 1332. Some states have passed legislation that they'll do it, but there have only been 4 states that have actually submitted, possibly 5. That would be Alaska, and I couldn't find theirs online, but I could find everybody else's. So, so Vermont and Hawaii were like the first 2 states. And Vermont's, they actually have pulled theirs because their waiver request was to be exempted from the requirements to have automated shop, because their small group is only available through the exchange, and they couldn't get their shop to work, but they've had just their enrollment has been working fine directly. And so CMS has really backed off that automated shop requirement, which also works well for Oregon because we also have direct enrollment shops. So Vermont's waiver just kind of became unnecessary. Hawaii has a really interesting employer program that has been working really well for them, and they've had it for a long time. And their waiver requests them to be exempted from certain aspects of SHOP because their current program that predates SHOP has a better benefit for their enrollees. So the plans that are offered in this other employer program tend to be at gold and platinum levels, and the employers also have to provide more of the cost share. The employer has to pay more of the premium for the employee, and so their waiver is asking to be exempted from like having bronze and silver plans and the 9% affordability and stuff like that. So theirs have been filed. California's also filed one. Theirs is requesting the ability to allow undocumented immigrants to purchase coverage through the exchange, and they wouldn't be eligible for tax credits or cost share reduction plans, but they would be able to purchase through the exchange. And then Massachusetts also has filed one that is kind of similar to Hawaii in that they have a merged market. Their shop and individual markets are merged, but they allow their individuals to purchase on a calendar year basis, and their small group can purchase on a rolling basis, as most small group markets do. Under the ACA, in order to have that merged market, your small group market also has to purchase on a calendar year basis, and so that would disrupt their small group market, so their waiver asks to be exempt from those requirements. And then Alaska is the one that I have not been able to find a ton of information about. A news article I read said that they intended to file their waiver by October 31st, but I haven't seen anything about it. And it's kind of vague on what their waiver would be actually asking for, but they have most recently passed some legislation to create a reinsurance program because they're down to one carrier. Their insurance is incredibly expensive. The carrier's losing lots of money, so we suspect that their waiver is going to ask for perhaps a pass-through of the APTC money and to use that somehow to kind of bolster their reinsurance program, but there's not very much out there about it. So those are the 4, potentially 5 states that have actually filed.
Questions for Katie? Yeah.
What was that fourth one? The one with the merged market?
Massachusetts.
Just a quick comment. It's just kind of interesting that, you know, with the way 1332 was talked about, that we have really actually some pretty small ball kind of ideas that are floating out there. Just interested to think about. that going forward, because if Jesse is right and 1332 is going to be around for a while, this again is why I think Wyden is really important. I haven't gone back and read the statutory language in a while, but you know that of course agencies, once a statute's passed and the regulations that happen, they have to create a whole bunches of mechanisms that could be more conservative or more liberal, just depending on the perception of the agency and what needs to get done. So it's going to be interesting to see whether this will be a vehicle in the short term for some small ball kind of things, or whether there will be some bolder sort of discussions going on, particularly in the wake of the election. States may decide, well, this is the time to act and do something, and most states, I suspect, will be cautious about doing anything until it's kind of clear what direction things are headed. But it's very interesting to hear what other states are doing.
To that point, we have not, so we work pretty closely with Massachusetts on a lot of things, and I had reached out to Massachusetts just to ask them about their 1332 waiver and if they've heard from CMS if it's going to be rushed through, or how, you know, what the word on the street was, and they're getting a little bit of silence right now. I don't know if CMS knows what they're going to do, so I thought I would share that with you. We all of us states talk fairly often, and they're not. Yeah, go ahead.
So I know with a lot of executive actions, I think there's like that 6-month window where if something goes into effect, it's kind of hard for the new administration legally to repeal it. Is that apply to waivers? So I guess what I'm saying is if someone got a waiver approved the 11th hour, is it hard for me because in my mind that waiver is sort of like a contract with the state. So I can't imagine that the new administration could come in and just nullify. I mean, I guess they could. Of course they could. Kind of uncharted territory. It might be a tough question to ask, but I guess what I'm saying is if that waiver hasn't happened within 6 months of the new administration taking office, is it possible for that waiver, like CMS gets it through and then new administration comes in, it's like that doesn't count?
So I don't know the answer to that specific question, but that's a really good one that I can look into. I don't know what your initial thoughts are. My initial thought is that there can be other disruptions. There's other action that could be taken by an administration, whether it's around cost sharing reduction payment. There's other ways to disrupt a potential waiver. But that particular question, I can
as opposed to just
absolutely
wholesale taking.
No, right. That's right. I don't know the answer to that question, but I can absolutely look.
In the theme of looking at sort of the history of 1115s as some sort of guidance, there is actually significant precedent for outgoing administrations granting waivers in the last, I don't know, 30, 60 days, and I don't believe that there's significant precedence of new administrations coming in and saying, okay, never mind, that was them. I mean, Arizona got a massive 1115 waiver in the last, I want to say, 2 months of the Clinton administration, and I mean, nothing negative happened to it in the incoming administration. And so I think that there's some precedent for, you're the administration up until that day, and the decisions like that you make are contracts. And for what it's worth, a lot of the ACA replacement plans that exist out there contemplate this sort of thing, and at least in the Medicaid world, explicitly grandfather in existing waivers for states. And so there's at least some level of precedent to think that if they got this, as long as
I guess
if Massachusetts got it, as long as 1332 continues to exist, they would sort of be run in that fashion.
And I would assume, speculating, that politically the new administration wouldn't want to come in and just turn their backs on states as a whole, right? Like say, sorry Arizona, you're out, or like the whole state kind of puts forward a waiver, right? You'd be telling the whole state you're on your own, which doesn't make much sense, but possible.
Yeah.
It's clearly possible.
I think for me, I would want to know what the actual legal parameters are, to know, so that at the end of your guys' sentence I don't do comma, we hope so. That's kind of how it's framed in my head right now. But so I think getting the answer is.
It is a really good question to ask, and a number of us will be on a conference call with Oregon Health Authority this afternoon about the 1115 waiver. So it might be a question to surface then about has OHA talked to DOJ, for example, to say if we were able to get this, does this constitute a contract which would give it constitutional protection?
Let me go to the phone. Does anyone have a question for either Katie or Don on the phone, Teresa or Victoria? Okay, any other? Yes.
Yeah, I had a quick question. So if we're expected to write out a year-by-year budget for the next 5 years, it seems difficult to do given the fact that we don't know what the advanced premium tax credit structure would be, if we're going to be getting insurance sold across state lines into our state. What is the expectation of how are we going to do that and keep moving forward with 1332 waiver when we can't really estimate those budget concerns?
There's no guidance on that, those exact types of questions.
Okay.
Those are, that's kind of why I wanted to outline what needs to be in that application, because
there's no way to put that answer together right now, to my knowledge.
right, I think in my mind you would presume things and then you would start having conversations with CMS. I mean, I think that's how you have to engage in this process. But yes, it's really difficult. Yes.
I don't think there's any difference.
There's a lot of unknowns.
There, but
right. I wish I had something. The magic wand, the magic hat that I have an answer out of.
Any other questions? Okay, so I'm going to talk a little bit about the framework that we're working under, and a lot of this has already been touched on. I think most of you know that Donald Trump won the election. He didn't. I apologize.
What? The real estate guy?
Yeah.
From TV?
Yeah. Reality. Yeah.
And the popular as well as the electoral.
And I think some of you know that he has vowed to repeal the ECA. Sorry, spoiler alert.
This is a terrible
Sorry, Michael.
So I think what I have been reading and what many of us have been reading, and I think Jesse touched on this a little bit, is that we at least have 1 year, 2017, and possibly 2 years through 2018 left of the ACA. And I do agree with Jesse that it's quite possible that these parameters around 1332 will be lessened, maybe made more flexible, because given that Trump wants to repeal the ACA, waiving the ACA is almost like a mini repeal. So that definitely is a possibility. Obviously, it's also a possibility that perhaps the guardrails get much more difficult. But we don't know. So that's kind of a wait and see game. So given that we could go either way, one of the issues that we kind of have to understand is that so as far as a BHP alternative, some of the discussions have revolved around a sort of a wraparound of the current federal structure. So if the APTCs go away, obviously there won't be a mechanism to wrap around. There won't be any federal funds to sort of supplement state funds. There's also a case, and maybe some of you may not actually know about this one. It's the House of Representatives versus Burwell, and this is where the court has indicated that has ruled that the administration has unconstitutionally paid for the cost share reductions, and currently the Obama administration is appealing that decision. And one of the big questions is whether or not the Trump administration will continue sort of waging that appeal. If they don't, then that can cause some real disruption with regard to the ability of people with lower incomes to be able to purchase and, well, not necessarily purchase, but actually afford to use their insurance. In addition to sort of the federal questions and the federal issues, we're dealing with a state shortfall of about $1.5 billion. So there are some interesting issues regarding state funding and what will happen there. So not trying to be a downer, but those are kind of that's kind of the landscape that we're looking at this point. And I think hopefully we'll know more by March 1st, or even into February. We'll have an idea of what the administration and Congress will do. Yeah, John.
Yeah, I think that this is the unfortunate reality that we face right now. In working with Representative Greenlick on House Bill 4017, he was very interested to make sure that there was some authority vested with DCBS, which of course it is for 1331, 1332, and we already have the marketplace discussion. So one of the things that is going to be really interesting, and this is a little bit off point to think about at the moment, but there's also going to be attempts to block grant Medicaid and a number of other things. And so the relationship that currently exists among principal agencies, DHS, Oregon Health Authority, DCBS, may really actually wind up being very different than we imagined back when we were talking about 4017. So the issues for advocates continue to be issues about inclusion and affordability. And I also know there's apparently in Congress today they're voting on the 20th Century Cure Act. There's an Amendment 4 that would potentially take care of the COFA population and allowing them to that population to apply for Medicaid. I don't know really what the status of that is, but there's just it's a way of saying that something that is already something that's on your radar screen is just making sure that we just take a look at all of the different things that are going on, the discussions. And one of the things I try to do in my career is make sure that state agencies talk to each other, and this is going to create some interesting dynamics, interesting discussions to have over the period of time. Everything from whatever happens with 1115, but also what might happen about future discussions about Medicaid. And then really, to the extent that we wind up ultimately saying, and this could be part of the March report, that if we have these issues, this is about populations that are excluded, this is about affordability issues, here's what could be done under 1332 as it currently exists, here's what we could do just on state authority, and then pricing those kinds of things out. Because ultimately, even though I absolutely agree it's a worrisome kind of thing about the deficit that we face coming into this next budget period, but ultimately there have to be decisions that by our legislators about what's important and what's important to fund and who's important to include and what kind of benefits can be given to people who are really struggling. So it's really not a question, I realize, but I mean, I think we're all in need of saying some things out loud that are on our minds.
That's a great point. Yes.
I also just wanted to kind of slightly push back on your point that the wraparound structures would collapse without the tax credits. That's not exactly true. It becomes more expensive, about 2.5 to 5 times more expensive per client, depending on what category of actuarial value that they're currently in. But there's nothing specifically stopping us from using that same program to just cover a standard 70-30 split employer plan or something like that. So we run a premium assistance program that uses that wraparound structure, and ours will continue to survive whatever happens. It'll just cut down the number of people we will be able to serve given our per dollar essentially. But there's nothing, you don't need the tax credits to exist to wrap around and pay the out-of-pocket and premium costs for somebody. But whatever subsidy structure that likely will still continue to exist, presuming Trump sticks with his plan to keep guaranteed issue, there's likely going to be some form of assistance that we'd be able to work around, so those wraparound structures can potentially adapt to a world without APTCs entirely, or whatever replacement structure.
Certainly, if there is some subsidy, yeah, we could still wrap around. I guess and I'm sorry if I wasn't clear, my statement had to do if there were no more APTCs,
even then,
to wrap around.
Even then, we can wrap around a standard employer plan or something like that. We don't need the APTC structure. It's from the budget perspective, from state deficits and all of that, yes, we're still going to want to be able to get as much money to make the program large, but we would just be able to serve a smaller population per dollar, but it's nothing stopping it structurally from...
yeah, I mean, I guess we could wrap around for those that have, is that what you're suggesting, those that have employer coverage?
Or you can just buy from a private health insurance company. Most of these companies are still going to be selling 70-30 actuarial value plans, so there's nothing stopping us from paying for that category. Like our premium assistance program right now is paying for people who do not really have anything in the way of tax credits, because they have the $0 tax credit, and they, above 250% of FPL, aren't getting any CSRs either. So effectively, we're just paying for somebody's silver plan directly from the carrier, and there's nothing to stop the program from doing something.
I think maybe the confusion is about the term wraparound, because the thing that would be getting wrapped around might go away,
Yeah,
but the state could still provide subsidies.
Yeah,
they can still wrap around insurance.
We're paying for them.
Yes, right. So you're
The
not...
state could establish a subsidy program
Right.
for cost sharing and premiums. Like,
Yes,
regardless
essentially.
of whether they're corresponding federal subsidies.
Correct.
Yeah, and then it's, I think, less
Just
of a
have a budget
wraparound,
problem.
but we're paying for
Right.
it, kind of a thing. Any sort of other questions about where we're at as far as the... Okay. So one way to approach the 1332 issue, or even the 1331 issue, is to identify sort of the problems or the issues that we're trying to address, and then looking at ways to do that, and then determining whether or not 1332 is a viable option, because there may be ways to address these problems that don't involve waivers, that is just something the state can do, or something that's already allowed by the ACA. So that's one way to do it. Another way to do it is to look at what can be waived under 1332, and then sort of focus on those provisions that can be waived and what solutions we can derive from waiving those provisions. Sort of internally, in this sort of small subgroups that in the internal sort of meetings and discussions that we've had, we have sort of approached it by looking at the problems rather than by focusing on the provisions that can be waived. So I would basically leave you all to sort of determine which approach you want to take. Also, if there are other approaches that you have, we can certainly consider those and determine how we want to move forward. But my suggestion would be that we first decide on an approach, and then from there we talk about ideas. So I guess I'm turning it over to you all for ideas about it.
So I apologize for being late. Are we mandated to stay within the boundaries of kind of a 1332 conversation? Because to John's point about inclusion and affordability, and considering the mass amount of uncertainty regarding the 1332 waiver process, how long that application is going to look the way it does, us identifying problems that may not exist because of that uncertainty in a year, is this the right group just to talk about what we are trying to do and then figure out if 1332 is the right option amongst many? Or do we have, I guess what I'm saying is, can we use your approach to figure out the problems or the things we want to do and then figure out if 1332 is the right option, but also use this group to explore other options?
I think absolutely we can explore other options. There's nothing in the bill that would prevent us from doing that. We just have to make sure that we look at a BHP alternative and also whether or not 1332 makes sense to address that alternative. So our decision may be that 1332 is not the right vehicle, but here's a problem, and maybe we have other solutions for that problem, but 1332 isn't a solution.
And again, apologies, we'd have to have something out to the legislature by when?
March 1st. So the Marketplace Advisory Committee recommended that we almost have an interim report March 1st, maybe identifying the problems and potential solutions given what we know at that time, which may not be a lot, and then issuing another report in July that by then hopefully we'll know much more. So that was kind of that they suggested.
Thank you.
How we approach it. Yes.
I know we have a number of other meetings scheduled. I appreciate that. We have a pretty intense number of meetings, given that it's the holidays coming down the stretch. But I think it's really, really important to do so. This is a question that, I'm searching for context and trying to understand how things might work. And the timing of things. So, for example, one of the things the Trump administration wants to do is this competitive idea about selling across state lines, which I have no understanding about how something like that gets implemented. It could get implemented even before the ACA goes away, if that's their intent, because that was a big line of discussion. And I don't understand the regulatory requirements here in the state about how we lose traction and but what other safeguards we might have. In other words, the worry that I have is that you could get an affordable plan that doesn't cover anything. So trying to think about this in context, and I don't know, for example, if the Trump administration could do something immediately with saying, while keeping the ACA, we want to now make it available for insurance companies to offer across state lines. I just don't know sequentially how something like that could happen.
Yeah, I think it would definitely take an act to Congress to do that.
They'll find that a harder lift than they might think.
Yeah, I think definitely you'll get some pushback from states. But I know amongst Republicans is that selling across state line is a popular idea. We've had bills in our own legislature attempting to allow for that, for Oregonians to purchase other state products. And as far as regulations currently, obviously under state law, or current state law, those plans that were being sold in Oregon would have to meet all the protections that Oregon provides. But my understanding is that the legislation being proposed would supersede state law in those areas. So I mean, I certainly think if Congress were to pass such a law that allowed, then it could, I mean, it would have to amend provisions of the ACA, obviously essential health benefits, several provisions of the ACA in order to do that. And I think it would be complicated, but certainly it's not beyond the realm of possibility.
And some of the proposals have included that qualifier that, you sell across state lines, but anything sold in the state would still have to meet the protections of that state, which basically neuters the whole proposal in the first place. And so, I mean, I think that there's ways in which basically it happens, but it doesn't actually happen. Versus, or versions that open that up to state decisions more, so that state X says, you can sell any product here that you've licensed somewhere else, that's very different than the federal government saying, this is now, the credit card industry of the 90s where everybody gets licensed in one place. And I think that that's where even that idea has a lot of pushback among Republicans. Several of the proposals of the ACA alternatives include explicitly, again, the primacy of state regulatory authority.
I'm not sure. It seems likely to me that if Congress were to try to do that, it would be outright opposed by the National Association of Insurance Commissioners, which is supermajority Republican now, and I find it hard to believe that they would go against them, but maybe they would. Who knows?
Yeah.
So as far as an approach, does anyone have a preference or ideas about how to approach, how you want to approach the issues?
Well, I just want to say that I totally agree with Jeremiah. If we approach it from a consumer point of view and we look at the inclusion and affordability and innovation, basically what our coalition is about all along, I think that's a starting point for me, so that we would be exploring. So for example, in that context, I'm not interested in what some of these other states have explored or done, but really looking at, from an Oregon perspective, what is it that we want? And I think starting from a need base makes sense.
So identify the problems and then determine the solution, whether or not it's 1332 or something else.
Exactly.
Okay, is that?
It seems like identifying the problems in a pretty holistic way would be helpful. So I think there's a set of problems that the basic health plan was specifically designed to address, and we should talk about those, but there are also some other problems with the way the system is working that I think are pretty widely acknowledged, including the family glitch, and obviously that whole thing might go away depending on what happens federally, but there's a family glitch, there's the problems that DCBS identified in its report for certain categories of Medicare recipients. There's a number of things like that. I think we should look at all of those things and see what we can do. And I think it would be worth dividing up the things that we could do maybe into things that we could do that would be relatively budget neutral to the extent that those even exist, just because those would be the easiest things to do, and the things that would take money, and then maybe try to come up with some sense of which of those things would achieve the greatest bang for the buck with the funds, so that we could make the strongest case to the legislature to spend those funds.
Just to add to something to that, if I might, because I really appreciate, Jesse, bringing up Medicare, and I was appreciative of DCBS doing that in its report. And of course, Medicare is separate from the ACA discussion, but again, because we're going to be coming back to how I would like to think about it, about looking at what are the gaps and issues and concerns that affect Oregonians, and Medicare has kind of flown under the radar screen with the idea that, people that have Medicare are insured, but there are problems as far as, in some cases, inclusion, but also mainly affordability issues. So I would really support the idea of just taking a look at, from a needs base, in some sense, irrespective of the ACA, but with that in mind about what an ACA remedy might be and what a state remedy might be.
And depending on what happens federally over the next couple of months, we may want to shift gears entirely, but that seems like the framework that makes the most sense right now.
Okay, so so trying to summarize basically what you said, and jump in if I'm not characterizing this correctly, but basically what I heard you say is almost dividing the issues into buckets of maybe easy, moderate, and difficult, and then determining what is most cost-effective in relation to the benefit that you receive.
So
Is that kind of what
Are
you're...
you saying issues or the resolutions to the issues?
Well, I mean, I think we need to start by identifying what the issues are and then come up with a list of what the potential solutions would be.
And that's where you start talking about money
Yeah.
versus what we could bring.
Right. And I think whatever the cost-benefit analysis has to be not just cost-benefit to the consumer, but also to the whole system in a way, because there might be some ways of bringing more people in the door that actually benefit everyone. If we could find ways of bringing more young and healthy people into the risk pool, that would benefit everyone, for instance.
Okay. So that to me sounds like a pretty good way of approaching the issues.
One suggestion, and this is something for your consideration. It's great to have Tim here from the Oregon Health Authority. I really think that what I'd like to encourage to happen is to have an invitation to the Department of Human Services to have a representative at this table, and moreover to make sure that we, through this group effort, to foster the idea that the three agencies really need to make sure that they're talking together and sharing ideas and thoughts, and because there's going to be a lot of what-if scenarios that begin to arise. So just for what that's worth, and I don't know what it takes to do that, to add somebody officially to the group, but I think that could be really insightful about, particularly as we're talking about needs and issues that DHS is very much familiar with as far as affordability issues are concerned in Medicare.
Is there anyone in particular? I don't have a lot of contact with DHS.
Yeah, I would start with Clyde, because Clyde might want to figure out, because there have been changes in their leadership team over there too, so I would definitely start with Clyde.
Okay, great. So I guess we have an approach outlined. Are we prepared to talk about ideas today, or is that something we need to take back and, or not ideas, but identifying problems today? Is that something we can start doing, or do we need to think about it a little more and do it at the next meeting?
I can't think of any reason why we couldn't start, as long as it's expected to be definitive.
Yeah.
Katie's going to actually...
So I'm going to type, one thing that we've done in other meetings that I found was really successful is that if I type and you guys can all read it, if I'm getting it wrong, you can correct me, and then we don't have this like thing of like 4 meetings later, like, no, that's not actually what we were talking about. So I'm just going to type it, and if I'm not getting it right, shout out and correct me.
So who wants to start? Yeah.
Immigrants under the 5-year bar for Medicaid eligibility.
And is it safe to say that the populations, or the areas would be the stuff identified on the BHP work, right? I mean,
Right, yeah.
Is there anyone that disagrees with that, like immigrants, family glitch, Medicare, and so I think sort of a general idea that anybody under 200% FPL, right, which is the core population that would have been served by the BHP.
I think that captures
that. Is there anything to add to that list?
Well,
I guess is my question.
I mean, what I would like, and I don't want to claim dictatorial control over this conversation, but what I would like is to have a conversation that's broader in scope than just the populations that would be served by the BHP, because the sort of motivating idea of 1332 was that you could change the system wholesale in a way that would actually work better for folks. The guardrails have made that a more complicated conversation to have, but I think we should be looking more holistically at the whole system and whether there are ways we can make it work better. So one group that I am concerned about that is definitely not in that category is actually the people who make too much money to qualify for subsidies, because they are subject to really astoundingly high rate increases every year under the ACA, and I wonder whether there's something we can do to protect those folks. They're obviously more able to pay by definition, but they're being asked to pay so much money that it's really quite a burden on them.
I just hear you including the employer covered. You don't fall covered in that umbrella, or just?
I think it's worth thinking about them. It's more complicated to figure out what you would do about that than about folks on the individual market who don't qualify for subsidies, but there's no reason not to talk about it.
Similarly, once you get right above 200%, then the cost sharing reduction drops a lot. So that's another point at which there are families where that becomes a really big lift for them.
I mean, that could be broadened to just look at the cliffs in general.
Yeah.
I mean, that one is a big one, but I mean, even
There are more, yeah.
that's that's one of the issues with the under 200% in general is movement between Medicaid and private insurance, and then working up in the cliffs that are associated at different thresholds.
There's technically a CSR between 200 and 250, but it's not much, so yeah.
That is a sub.
I think I want, this is Victoria, I think I want to remind you of something that we were talking about before, to talk about those who are unable to receive, those who have difficulties due to documentation status. So LPRs kind of along with that comes population, since we have been thinking long-term about whether we could move those two into a similar program. And then and folks who are really constrained by affordability. So looking at the 0 to 139%, and then the 139 to 200%.
So I'm sorry, can you say that again? I was fixing one of my other bullets.
Sure. So for us, the folks, thank you for giving me that additional bit of time because I didn't really formulate my thoughts into complete sentences before. So folks who are barred under the 5-year bar from 0 to 139, and then the folks who are constrained by affordability from 139 to 200% FPL, who may or may not be Medicaid eligible.
So we're getting a bit of feedback, so if you have your phone on the table, would you mind maybe putting it on your chair? Or
So Victoria, I'm sorry, I still am not 100% following you, so I'm not going to be writing it down very well. So the people who are the 5-year ban who would qualify for Medicaid if they had been here for 5 years, and then folks 139 to 200. I'm sorry, I just don't understand what you are.
Yeah. So I think my goal was to say that I know that we were talking about the population that we were that we had really considered would be affected by BHP, for whom BHP would be helpful. Mm-hmm. But I want to prioritize, and I don't know whether we are yet prioritizing, but just bring out that there are kind of two different groups: the ones below 139 who couldn't get Medicaid, who are not eligible for Medicaid, and the ones who would be able to at a slightly, who need more affordability support to purchase plans on the exchange.
Perfect. Thank you.
Or to make that more cost effective for them.
Yeah.
I'm probably going to say this awkwardly because these are problem statements. So I think lack of coordinated care models.
In the private market?
Yes.
I want to say specifically what.
Well, I really like the idea. I'm a fan of the CCO model and the promise of integrating mental health, physical health, oral health, and also working from a person-centered point of view.
One other element that could be part of something like a 1332 waiver that should maybe be part of this conversation, even though there's conversations about it going on elsewhere in DCBS, is the idea of having some sort of option for people who live in parts of the state with uncompetitive insurance markets. So a kind of public option of last resort, or just a public option for the whole state, which I would be totally fine with, but the last resort concept is the one that seems like it actually might have legs to it.
Any other thoughts?
All right, so as the insurer guy, I'm struggling with 5 and 6 because I'm trying to keep some scope on this in terms of this is coming out of the BHP work. The idea, I think, of the bill was we might be a 1332 waiver. And if you look at what 1332 does, it basically lets you remove QHP requirements, exchange requirements, and the carrots and sticks in terms of the tax credits and mandates, right? That's the scope of 1332. So I don't doubt that there are conversations, and there in fact are conversations on 5 and 6 going on everywhere. I'm struggling a little bit with how that ties to what the original conception of this group, which was to sort of look at basic health plan as an option and then possibly a 1332 waiver to bring back to the legislature. So I don't mean to kill those ideas, but I'm trying to understand what this group would do on those ideas.
In my mind, if we're trying to find and identify the problems that are affecting the population that would have been affected by the basic health plan, that was the scope, I think, in my mind of this group. Not just how we would operate within the basic health plan, but what we would do, or should I say basic health program, but what we would do for the population being affected by the basic health program. That's kind of what I understood as the issue finding that we were doing. If there are problems covering this population, what are they? And then how do we address them? And what resolutions would cost money? What resolutions wouldn't cost money that we could just do internally within the agency? But that's kind of why I asked at the beginning too, is like, are we just bound to the 1332 scope conversation or a BHP conversation? Because really what we're seeing is there's a lot of uncertainty, obviously, with whether or not these programs are going to exist. Are we just working for this population, using this group to figure out what's best for the population?
I really agree with Jeremiah, but to your point, because I think that's what winds up being formalized and sent to the legislature. We're a long way from that. But just would point out that we have Medicare eligible individuals up there as well, which is outside of the scope of 1332 waivers, as I would understand it. So, but in any event, if this is a brainstorming list and we do some work around all that, ultimately we may decide to hone it down. But I would like to keep it open to all of these discussions if the group agrees.
I think as far as brainstorming, it's good to maybe throw up all the ideas and then being cognizant of sort of the timing that we're working under and basically the limited number of meetings that we have, and maybe limit the scope a little bit if we have to. Sean?
So if we're going broad, I guess we need to put the undocumented up there as well.
Mm-hmm.
We can't get tax credits for them, but California have got the 1332 waiver for allowing them to purchase coverage at least.
Can they purchase coverage at all?
No, but then California had the 1332 waiver that said that they were going to be able to, through the exchange, just not get the tax credits.
Right.
So
But they can purchase directly.
from a private insurer, yes.
If they have enough money, which many of course do not.
Mm-hmm.
So then, Sean, are we looking for tax credits then? Or just the
That
ability
would
to
be a
purchase
federal
through?
thing.
Okay.
Just
I think that's, to that point, yes, there are many different ways in which we could work on undocumented issues, and so I'm glad that it's up there.
it's not really something this group probably could address, but if we're listing the gaps that exist in the system, it should be up there.
Well, there certainly will be Cover All Kids discussion going on in
Correct.
2017, so that's also something to follow and learn from.
I think this would fit in the, issues that would be the target of BHP, and I think it's embedded in there, but maybe not said directly, is streamlining and easing the transitions between Medicaid and private insurance.
Oh, yeah.
Continue.
Earn was a big part of it.
So one thing that's kind of related to both that and number 5 is, and this would be within the scope of the 1332 waiver, is whether we might want to alter the essential health benefit structure in some way so that that package looked more like OHP or looked more like some kind of value-based benefit design that could encourage the development of coordinated care models. It's a pretty wonky thing to be talking about, but might be a worthy conversation to have because the EHB benchmark requirements are very restrictive in a lot of ways. The state doesn't have a lot of flexibility without a waiver.
There's also been some rumbling for the COFA program to add a dental benefit.
Yeah. And along those lines, we also discussed non-emergency medical transportation. It turns out to be a pretty huge issue for people. So dental and non-emergency.
Those are.
For both of those for COFA?
Pardon me?
Both of those for COFA, or just in general?
Well, it ties into the whole BHP cost analysis, which we would have to decide on those for anyone we want to give medical benefit and don't provide those.
So actually, I mean, there's nothing that would prevent like a non-emergency medical transportation mandate. It doesn't conflict with BHP. It's just another benefit, if that's kind of what you're talking about.
Yeah. In other words, is the essential benefits were being talked about way back when it was thought that can't afford dental and that sort of discussion, but it is really something that, when we think about healthcare, if you can't get your teeth fixed and you can't get around to get to your healthcare appointments, those are really not only direct care issues, but they're also access issues.
Yeah, so it kind of goes under 9 because it's an OHPB. I'm sorry, OHPB. It's an OHP benefit.
Yep.
If there was a mandate for that, would that be subject to the provision in the ACA that says that the state general fund has to pick up new mandates? Because that would be a huge barrier. It would. Mm-hmm. That is my very least favorite element of the Affordable Care Act.
That's how you give votes.
So I am a little bit concerned about getting into, because there's already a process in place for EHB, I'm a little concerned about disrupting that process and maybe getting into sort of that realm. But I think it's definitely worth putting up there and then maybe talking about further if that's, something that...
Yeah, so process kind of question is that we take this brainstorming list today, and I'm thinking that between now and the next meeting, you might be having some discussion internally and come back with some comments and thoughts on these kinds of things. Here are some possibilities, here are some constraints, some of the things that we would think about to have the benefit of the thinking of staff coming forward as a way of dialogue and then moving on to what we can do next.
Yeah, I think that's definitely how we're going to approach it, and realizing that there's a lot wrong with our current system and that we're not going to fix everything. Given the kind of the constraints that we have, I think that's probably kind of the way to do it. But again, I think right now it's just time to throw out ideas and put them on the board. So we have 9. It would be good to have at least 10. Just because 10's a better number than 9. So
I have an idea. This may be controversial to say this, but I think Oregon needs to take the next step in innovation. The reason why I would want to have innovation up there is that ultimately when this gets sent to legislators, like I was thinking if I was a new legislator or a legislator that's been around for a while, here's what we've done in Oregon history. This is ways in which we've made progress. Here under these uncertain circumstances and places where we are now, here's where innovation is going to continue to be.
Or to even build on that, how could the healthcare system address the all-too-popular buzzword of social determinants through the 1332 waiver in innovative ways?
So this is just sort of throwing ideas at the wall, but one of the things I wonder about with that is that there was, in the current version of the 1115 waiver, there's some changes that were proposed to the medical loss ratio for Medicaid plans so that it reflected investments in addressing social determinants of health as not just administrative costs. And I wonder if we might want to, I mean, this is dangerous because I really like the medical loss ratio concept, but I wonder whether we would want to have a conversation about the medical loss ratio for commercial plans and whether we could encourage those kind of investments from commercial carriers through looking at that. Mm-hmm. I mean, part of the problem with that at the moment is that the MLRs for Oregon plans are so high because the plans are mostly losing money, but that probably won't last forever.
Yeah, because they're all going to go out of business. So number 10 strikes me as really broad. Are there, like, what kind of innovations are you thinking
Well,
about?
I just, even just what I would want to just be cognizant of, whether it has to be stated here, is that our next steps in innovation. In other words, you know, before the ACA, you know, we conceived of in the state of Oregon, the Oregon Health Plan. We've made other steps and innovations along the way, and OHA has been active in 1115 waivers and all that. So what's really our next place of innovation? So it could be more of a driving principle rather than something that's brainstormed about. But I do like the discussion that Jeremiah brought up about the social determinants of health, because I think that's really, as we think about how healthcare is transforming, and we think about how people live their lives and all that, I think there's been much more focus on things like, you know, housing that's safe and sanitary so that people are not getting sick where they live, or people that are living outside. All those kinds of things are really important as we think about, again, from a need base, we have populations that are really struggling with things that are related to healthcare, as we wind up calling them social determinants. So it's something I'd like to see.
And I think that that discussion, that middle ground between what the health system should be responsible for, whether it's housing or food insecurity or whatever, is one that's still very new and very much up for debate. And the Medicaid population, CCOs are taking it on within the waiver in a small little way by talking about community health partnerships and having these plans lead efforts to coordinate housing activities. What does that look like in the commercial market if you're talking about a population that is affected by a lot of these social determinants as well? And how reasonable is it to expect, or what should we expect of the marketplace to address some of that stuff? That's not something I have an answer to at all. I don't think anyone does. But if we're considering that for everyone below 138% of the federal poverty level, maybe that's something to consider for people just a little bit above it.
And under the community health improvement plans, I mean, really what has evolved with the Oregon Health Plan is the conversations that are occurring at the community level. And right now, while that's a requirement for the CCOs to participate, and many of the commercial payers are participating, but not all of them, I think it's a way to bring the community together to address the issues. There's savings from that across the board that can be reinvested.
Mm-hmm.
I think one of the reasons that it's worth talking about savings of this form is that it's at least conceivable that you could make a case for those savings in a waiver paying for something else. Might be challenging, but it's conceivable.
Okay, so we're up to 11. Any other?
You like the number 11 though?
Actually, 11's my favorite
go to
number.
15
Right.
11's my favorite number, but
That's my favorite number too.
All right.
but we don't have to stop at 11 just because it's our favorite number.
I would just say that I'm happy with 11 for now, but as we tease some of this out, there may be additional things that get added.
Of course.
I mean, there's a bunch of things I could throw at the wall if I wanted to, but one other thing that occurs to me that might be worth mentioning is I know a relatively common problem that consumers are experiencing on the marketplace is people who are eligible for cost-sharing reductions signing up for bronze plans. And I think something we could do to either prevent that from happening or help those folks in some way. So
actually, thank you for bringing that up because that reminds me. Doug Barber is a part of this group, and he's unable to be here today. He had a family emergency, but that was his suggestion. Is that a lot of he indicated about 30% of the people between or up to 200 are buying or ended up buying bronze plans, and he wanted to know if there was a way to direct these people to agents to get them thinking about actually purchasing a silver plan because it's in their best interests. His suggestion was possibly doing that through the FFM, like some sort of pop-up, but as we know that we can't, at least currently, there are no ways to make technological changes to the FFM, so if there's some other way to get at that population, I think that would definitely help a number of people.
I do have a question about that. I just don't know what exists out there. So in other words, putting something on a website is one thing, but letting people know, or in other words, if you're exploring, purchasing health insurance and this is what your profile looks like, here's some things that you might want to consider because as Doug will point out and agents will point out, some people are fully aware of it and want the bronze plan simply because they think that's going to wind up being a better thing for them because they'll never use any health care, so they don't need cost-sharing reductions. But I don't know if something like that exists, so in other words, there's information that Sheba has and other organizations have that's sort of like a consumer guide is basically what I'm thinking about. And I don't know if something like that actually exists other than just the word of mouth of agents saying, here's something you ought to consider on a one-on-one, which is important and powerful, but I just don't know if there's any sort of backing document.
Well, the marketplace has materials that talk about that, and I know it's something we encourage our community partners to talk about with consumers. But as far as like a statewide sort of communication plan or education plan, I'm not certain whether something like that exists. But that may be one of the sort of ideas to get, to do more outreach in order to encourage this population to purchase the silver plans. But yeah, I don't know, beyond what we're doing, I'm not certain what there is. The federal government might be doing something.
They do have, like, if you go in and you're browsing, your window shopping, they call it, there is a thing on there where you can put in, like, how old you are, how many people in your family, how much you make. It'll come up and tell you whether or not you might be eligible for tax credits. And then it does ask you, like, do you go to the doctor a lot? And so then it will pull up and will show you, like, the bronze plan is cheaper premium-wise, but the silver plan with the cost-sharing reductions will actually save you money here. But that's only if you put in that you are a person who maybe has a chronic something or other that you go to the doctor a lot for. And otherwise, it'll just show you, like, oh, here's a bronze plan, it's cheap.
That's very helpful to know. So it's not full information that people might need.
I seem to recall that the long-departed Cover Oregon's plan originally was to have CSR-eligible people default display to just the silver plans. So you could choose to look at the bronze plans, but the default display would show you the silver plans, which probably would have helped the situation enormously. But we can't pursue that solution now.
Marketplace is heading in that direction on their own. This year it does have a highlighted silver plan category saying there are extra savings available with these plans. That's the one that it's directly pointing you towards. You do people are still going to, if they choose to view all plans, which is an option, then they view silver plans, view all plans one. If you're viewing all plans, you're still going to get the bronze first. There's nothing really we can do about that, but they are heavily putting people towards silver plans this year as opposed to last year.
Maybe that's much.
It's an improvement. I don't know if it's going to be enough. Most people don't really read through every screen that it puts up for them, so.
Well, I think what's tricky with that population too is knowing there may well be people in there who are consciously making that choice.
No, there are.
Right?
They're right.
I think that came out in the BHP discussion.
Yeah.
It's like, how do you filter the folks who genuinely would be better off in a silver plan, and the folks who are just like, I just want to meet the mandate, you know, and I'm the young invincible that everyone wants to be purchasing, and, you know, bare bones to you.
Yeah, it's kind of interesting, that discussion about choice and all that. Like, you know, I'm a PERS retiree, and you don't have any choice about selecting something that's worse for you.
And in light of uncertainty at the national level and what sort of parameters get put on any of these things moving forward, there could still be, as part of this, a conversation of to the extent states have more control over, say, how subsidies are divvied up or how CSRs are given, is there a scenario where, you know, we'd want to make some of those cost-sharing reductions available if you chose a bronze plan? I mean, thinking it's maybe a little bit out of the box relative to the current, you know, status quo, but in a world where states have more control over how they structure the subsidies, whatever remains available, this could be something that could get consideration.
I think that makes a lot of sense, especially because, in a sense, tying the CSRs to the silver plan is just a completely arbitrary decision, right? I mean, the plan that you wind up getting when you buy that is not actually a silver plan for you, because it pays more than a silver plan does. So, I mean, I think it would be worth looking at whether you could tie things to a bronze plan in a way that would protect people from making a bad decision around this.
Generally having more costs in the form of deductible on a bronze plan, so it's more expensive per plan to offer those CSR benefits, because the 60-40 split as opposed to 70-30 means
So just saying extra feds money, but limiting it to the silver.
Exactly.
Save them 10%, right?
Yeah.
But you wouldn't have to, I mean, right now the CSRs build on that silver plan to make it 80 or 85%.
Right.
If somebody wanted, you know, hey, I'm relatively young and healthy, even though I have low income, I just want no premium, and so this CSR would then build that bronze plan back up to 70 or 75. So like you could say whatever dollar value it costs in the current situation for the cost sharing reduction itself, you could invest that even with the bronze, and so it still would potentially save some money on the plan choice while still giving, you know, a similar financial boost above their selection.
My concern would be that if the federal government's still, when they're doing this on a population scale, they're still effectively paying for the CSRs for people who don't use them, and the bronze plan enrolling population doesn't use their health care in a lot of cases, and that's why they're enrolling in the bronze plans, that they're making the correct decision as opposed to not understanding the benefits of a silver plan. So at some point I would worry if that would be paying for CSRs for people who aren't actually going to be using those benefits most of the time, and because they're still going to have some form of deductible incentivizing them not to use healthcare, especially those first couple times in a year, that we're paying as much in benefit for that's not actually going to get used as much, if that is clear.
Yeah, I mean, I think it's more about like conceptually the concept as opposed to like figuring out how,
right,
you know, how that
yeah.
But it's already been done on
figures
some
out.
small things like the bronze plans, like some of them have 3 doctor's visits before deductible applies, so that you can still use your plan a little bit without having to fork out $6,000.
Yeah.
So, you know, I think that there might even be some ways that you could pick a couple of benefits that maybe, you know, you could apply cost sharing to in some way. And so you aren't spending as much money, but you're impacting people in what they actually use.
So we're up to 12.
We've got a lot of work to do.
Yeah, we do.
Can we have colonized Mars?
Make it a baker's dozen.
I am genuinely concerned about scope. And I appreciate the idea that we shouldn't be narrow in our thinking, but I think at the end of the day, what we need to produce is a report to the legislature, correct, and a recommendation on whether we're going to apply for a 1332. So I don't want to completely lose sight of the lens of 1332 in this group's discussion.
At the same time, one of the things that could be done in the report to the legislature is that we also considered these things, or these things were identified. We have no recommendation on them at this point in time. Because again, one of the things I think the legislators will want to know is what are the options for moving forward? Where can we go? And what other things were considered? Because you could imagine somebody saying, well, if this report gets put out and say, well, did you consider X, Y, and Z? And we can say, yes, we did, but we did. Here's what we did. We just mainly listed them and saying these are issues that come up from the position point of view of what are the needs out there, and then returning to what we think we could do both with 1332 or a totally state-funded option. So I'm less worried about it. Heck, I'm retiring at the end of the year, so.
Congratulations, by the way.
But really, basically.
You picked a fine time to get on.
I didn't think it was going to be quite like this, that's for sure. But in other words, I just really, I'm going to be really very interested in subsequent years, just looking at what Oregon is doing, and I just, I have a great fondness for what we've done. I came out of, the work that we did in the long-term care system a number of years ago, where we basically completely changed that system and became a leader for a nation. The Oregon Health Plan is a totally unique approach to things. So I'm just really very interested to say that Oregon's got a lot of things on its mind about how to make things happen, and we may not be able to do everything all at once, and some things we may never get to, but at least we've identified what those are from a needs base. So for what that's worth, I don't think we're very far apart on that.
I don't think we are.
Yeah.
So Teresa and Victoria, were there any additional problems that you wanted to talk about?
No, but thank you.
Sure. Okay, so we've actually reached the next point in the agenda, and I just wanted to talk about our next meeting. So December 8th, December 16th, December 28th, and January 12th are scheduled, and I sent out meeting invitations to everyone. For those of you that are here, and I know some of you sent decline, tentative, that sort of stuff, but unfortunately I just ignored those responses. And so I would just like to know, December 8th, is there anyone here that can't make December 8th? Oh, Jesse's.
I have to go to the NAIC. Okay. That's going to be pretty interesting.
How about on the phone? Anyone can't make December 8th? December 16th? December 28th?
I'll have to call in that day.
Anyone on the phone December 16th or December 28th? January 12th?
I can't make either of those.
Okay, that's Victoria?
That is Victoria.
And what about January 12th?
For reasons stated earlier.
We'll expect you to come back, please. Thank you very much.
Okay, and so during those meetings, we will have a call-in option. Also, I think those meetings will have some sort of streaming where people can watch us. And I believe, well, I know we have a separate number for the public to call in on. That was necessary in order to be able to have the ability to mute their lines. And I wanted to point out that at the last meeting, we'll allow much more time for public comment. And I don't know if we'll be able to have a draft of the report by January 12th. I can't remember if we figured that in or not. So we may, I think what the idea then, if we don't have the report by then, we'll distribute it to the group and then just kind of maybe do a call or do comments via email, and then use those comments to create the final draft. So any questions about kind of going forward, I guess, and then the next thing, I guess, what we'll do is we'll take this list back and see to what extent they require a 1332 waiver, to what extent they maybe certain provisions of the ACA aren't waivable, because there are several provisions obviously they can't waive. So we'll look at that, and then the idea will be to talk about scope and which ones we kind of want to go forward on, and then determine sort of what we want to do to address the problems. So we will email this list out to you all, and then ask you to think about the ideas and think about solutions to the idea or to the issues that we all have identified. So at this point, we're ready for public comment. So I don't know if we have any public comment. And John, there are people on the committee that are missing, or subcommittee that are missing more than the one meeting you'll miss. Mm-hmm. Do you want to be an official member?
It'd be fine with me.
Okay.
I didn't want to displace another advocate who's going to be here in 17.
No, we're basically taking all comers. Okay. So.
Well, I'd be happy to be.
So you've met the very low bar that we set. And congratulations to all of you. You've all met that very so no public comment. So
I do have one unrelated question. And this is, well, it's related, unrelated, and this is, I guess, a question for Dawn. Are we going to see the report that's going to the legislature in December on basic health, the final report before, or is it just going to be sort of available for us that day? And if you don't know the answer to that,
I don't know the answer quite yet, because it's just going to, I think, depend on timing when it's all put together. So I hope that I have an answer for you by the end of today, actually.
Okay.
It's my hope. Yeah. Yeah. I mean, the main changes was really incorporating the conversation from the Marketplace Advisory Committee meeting. And we, that's why we wanted to get you that policy report beforehand, but let me see what I can do, hopefully by the end of today.
Thank you.
Yeah. Mm-hmm.
So anything else before we adjourn? Okay. Well, I appreciate you all coming today and participating, and we'll see most of you on Sunday.
Thank you.
Katie, before we go,